This video is brought to you by Answerly, a question platform that pays you for adding high-quality answers on different questions. The users are rewarded in Answerly tokens, which they can easily convert into dollars or any other cryptocurrency by using one of the exchanges mentioned in the description. Hello and welcome to our YouTube channel. In today's video, we'll be talking about the truth about crypto's flash crash. The cryptocurrency market is experiencing a broad and massive sell-off during the New York midnight trading session. Some small recoveries are being attempted, with dead cat bounces off the extremes at Bitcoin, Ethereum, and XRP. It remains to be seen how much deeper this market may dive. However, watch closely as these kinds of moves can very easily reverse and trigger a massive head fake. A downturn in global stocks appears to be spilling over into the nascent crypto market, with a bout of weekend selling erupting into a mini-flash crash in prices of Bitcoin and other notable digital assets. A flash crash is when the value of a market plummets in electronic trading over a short period of time. It underscores the volatility that comes along with trading, especially in the digital age. But before we dive deeper on how does a flash crash work, like this video, smash the subscribe button, and click the notification bell right now. If you don't, all of your crypto investments will crash down. Don't want that to happen, right? So just keep on watching. Going back, extremely large blocks of trades can usually set off a flash crash. Computer trading programs make any crash worse. These bots use algorithms that recognizes aberrations such as sell orders. They automatically react by selling their holdings to avoid further losses. These programs automatically sell according to their code when a world event or a computer glitch tells them that something unusual is happening. These trade programs make any stock movement more intense, adding risk. The concern is that one of these crashes could cause a recession. A typical stock market crash signals a loss of confidence in the economy. When confidence is not restored, it leads to a recession. Investors usually realize a flash crash is caused by a technical glitch, not a loss of confidence. But a flash crash could trigger a confidence loss if it lasted long enough to cause concern. It would also destroy wealth for investors. It might even frighten consumers into buying less if it lasted long enough. It could be just enough to trigger a recession at the wrong phase in the business cycle. Moving on, a flash crash early Saturday morning led to a number of key large-cap cryptocurrencies losing a tremendous amount of value in short order. Most large-cap cryptocurrencies followed Bitcoin's lead after the world's largest cryptocurrency saw a dramatic 18% decline in 1 hour. This extreme volatility did not spare popular meme tokens Dogecoin and Shiba Inu, with these tokens down 10.3% and 8.4% respectively. Inflation in the world's biggest economy grew at its fastest pace since 1990 in October. The U.S. Central Bank has said it'll begin slowing the pace of its $120 billion in monthly bond purchases later this month. Fed Chair Jerome Powell, however, said the Fed will be patient in terms of interest rate hikes, but would not hesitate to act if a response against faster inflation were needed. Last week, markets regulator Securities and Exchange Commission rejected a proposal to list the country's first Bitcoin exchange-traded fund, VanEck, because it did not meet trading standards designed to prevent fraudulent and manipulative acts and practices. Well, there are a number of reasons why investors choose to invest in cryptocurrencies. Some investors may want to diversify their portfolios into alternative asset classes. Others may like the growth potential of this nascent space. However, a key focal point of many investors when it comes to cryptocurrencies is the potential hedging effect these tokens are supposed to have in times of crisis in other markets. That said, the rather sharp decline in crypto valuations has created a growing divergence among cryptocurrencies that are viewed as true safe havens and others that could be suffering from too much leverage, such as meme tokens. So, what precipitated the drop? The analysts at CoinDesk blame at least some of the downturn on trading in crypto derivatives, amplified by growing concerns about the prospects for tighter financial conditions that's forcing of assets that are sensitive to potentially rising borrowing costs. The decline was likely in part of technically driven, exacerbated by the derivatives market and not helped by the downside momentum behind high-growth stocks on Friday, to which Bitcoin has been positively correlated, wrote Katie Stockton of Fairlead Strategies in a Saturday morning note. NYDIG estimates that $1.1 billion of leveraged Bitcoin positions and $2.5 billion of crypto leveraged positions, including Bitcoin, have been liquidated in the past 24 hours, representing the largest such notional liquidation since September 7th. Some believe that Bitcoin and other digital assets aren't correlated with the prices of other assets, which has been heralded as one of the more appealing features of Bitcoin and its ilk. However, crypto has been trading more in step with traditional stocks and bonds recently, partly because of the prevailing low interest rate environment, and if that changes, then the values of a host of assets, Also factoring in inflation must be reassessed. In addition, part of the reason why both Dogecoin and Shiba Inu have been exiled from the top 10 cryptocurrency leaderboards is the relatively weak performance of these meme tokens of late. Both dog-inspired tokens have dropped more than 25% over the past month, and substantially more from their highs. A flight to safety appears to be taking place in most asset markets. For those looking for a stable, long-term core holding, Terra has become a high-profile token in short order. Meanwhile, as the crypto market shed billions of dollars, taking advantage of the falling price of Bitcoin, El Salvador's President Nayib Bukele tweeted at 12:19 a.m. about his country's latest BTC updates. El Salvador just bought the dip, 150 coins at an average USD price of $48,670. He followed up with another tweet a few minutes later, missed the effing bottom by 7 minutes. El Salvador has taken advantage of Bitcoin's price dips several times. Bukele was announcing that 100 BTC had been purchased by his country in response to reports about a COVID-19 variation now called Omicron on November 26, said that the currency's price dropped due to the new COVID-19 version. El Salvador's legalized Bitcoin in September. El Salvador purchased 1,370 BTC in total since September. The International Monetary Fund, or IMF, warned El Salvador last week against Bitcoin being used as a legal currency. Andrew Bailey, the governor of Bank of England, also warned that he was concerned about El Salvador declaring Bitcoin its national currency. Bukele responded to the boss of the British Central Bank by stating, "I'm really concerned about Bank of England printing money out of thin air." As the flagship cryptocurrency crashed below $63,000, most other assets in the market followed, generating more than $700 million in liquidations worth of long and short positions. Despite the significant losses incurred, open interest in Bitcoin futures remains above $25 billion. The significant amount of funds allocated in open futures contracts is a negative signal for the continuation of the uptrend. The high open interest rate could indicate that traders who got shaken out of the market in the flash crash are hoping to avenge the losses. Increase in buy orders could be contributing to the price rebound seen in the last few hours. Still, Bitcoin could dip further to relieve some of the pressure and stabilize the future's open interest. Such a significant demand wall may have the ability to absorb any selling pressure, as holders within the price pocket may try to keep their positions in the money. This in mind, if you have faith Bitcoin will bounce back, and you're a long-term believer, this could indeed be a good time to buy. If you're a short-term investor, however, then you're heading into the unknown with not even a shred of a compass. This is because there's no way of knowing if Bitcoin is going to fall further or bounce back in the coming days and weeks. It's also worth noting that even among crypto believers, there is much disagreement about the future's likely winners. Some people believe Bitcoin and Ethereum will always be the benchmark and stores of wealth, even if newer tokens outmaneuver them in certain ways. Crypto is one of the more volatile assets and is still in the face of gaining credibility as a bona fide alternative asset. Is now a good time to buy in crypto? Will this massive correction lead to the beginning of the crypto winter? Let us know your thoughts about this video in the comment section below. If you like this video, make sure to smash the like button and subscribe to this channel. To learn more about Answerly and Answerly tokens, check out the links in the description.